Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Today, my guest is Nick Kosko with CreateTailwind. Welcome, Nick.
Thanks, brother. Hey, it's like, do we have like some intro music we get to dance to or anything? Or like,
yeah, that'll be before. We won't get to hear it though.
It's a bummer, man. I was feeling like in a dancing mood. I'm standing up here at my desk, ready to go.
Yeah, it's a little bit of techno or something that we're missing out on. So
that's awesome, man. Thanks for having me on. And it's a pleasure because we talk almost daily. So it's this will just be another conversation for you and I.
Yeah, we were kind of talking about before the show, like what we should talk about. And I was like, I don't think we're going to have too hard of a time of finding a topic to talk about. But the one thing that comes to mind is I always feel like I have this complex issue always whenever I'm talking to you, like I'm trying to figure out what do we need to do to help this person.
Yeah.
And I couldn't think of the question, but what's the question you always ask me?
Well, I don't know. I ask you a lot of things.
I think are they trying to take back the banking function in their life or something like that?
Are they trying to solve a problem? What problem are they trying to solve? Well, first, before we go down this road, hey, Glenn, I'm being reminded of something. And so often we have to be reminded rather than taught things. And I'm being reminded lately about the mindset of gratitude. So can I just ask you a question?
Sure.
What are a couple of things you're grateful for today?
Oh, man. I'm grateful for my health, my family's health. I'm grateful to create my own schedule. And I'm going to go look at some mobile home parks after this. I always like looking at mobile home parks. It's one of my favorite things to do. And the bills are paid, which is sometimes you wake up in the middle of the night wondering if it's going to work out. That the bills are paid, you're going to get to see the next day, you know?
Yeah, amen. I'm grateful for God's provision in my life. I'm grateful that God keeps doing things for me I can't do for myself.
Yeah.
I'm grateful for the opportunities. I'm grateful for you. I'm grateful that, Lord willing, I'm going to go do jujitsu after this. I'm going to get my sweat in. And I got a pretty amazing afternoon scheduled with kids. And my oldest has prom tonight, his first prom.
Nice.
I'm grateful that he's experiencing that. He's got a pretty amazing girlfriend. And it's funny, his dad does jujitsu too. And we didn't know who each other was until a week ago when we were training together.
Oh boy.
So it's actually been really cool, really great family. So that's what I'm grateful for. And the reason I just said all this is so often we bring a posture that when we're trying to solve a problem, our brain becomes kind of closed up. And so if we can get our brain in a state of gratitude, it's neurologically impossible to be sad, upset, depressed, anything on the negative side when we're in a state of gratitude. And there are people that are really adept at solving problems. And the common theme that I see is they bring the posture of gratitude and looking at that problem as an opportunity. And if we look at that problem as something that is holding me back, holding me down, keeping me from being my potential, and that's what our focus is, it's really hard to get to the other side of it. So if we can look at that problem as an opportunity and I get to face this, right? It's really hard to climb a wall when our knees aren't up against it. So like, let's embrace getting up to that wall so that we can actually, maintain contact, right? Maintain pressure in it. In jujitsu, it's really tough to do things when you don't maintain connection. So let's maintain connection as we go to solve this problem and make it simple, right? Keep it simple, stupid. KISS. So often you and I talk and we get to talk to people. We're super blessed to talk to people seeking to solve this problem all the time. The ones that are struggling the most make it way more complex than it needs to be. So simplicity is on the other side of complexity. And so it's that pursuit to make things simple, break them down very simply. John Wooden, he was the famous coach of the UCLA Bruins back in the 70s. I should know how many national championships they've won in a row because I've talked about this so often. But he had Bill Walton and Lou Alcindor on his team, just incredible. And here, this guy had the most incredible record, and he was always going back to the basics. So do you know how he started every season with his team, Glenn?
No.
He taught them how to put their shoes and socks on.
Oh, man.
Right? Just back to the basics. Not, hey, we won the national championship last year, so we're going to invent 10 more of the most complex plays of all time. Right? Keep it simple, stupid. Hey, everybody got their shoes and socks on, right? Because if we just do the basics, so much comes out of that, right? You've experienced that managing mobile home parks, right? The more complex you make it, does that make it better? Are your results better or worse the more complex you make it?
You know, we can go a little bit into that just to go further. Is what I am focusing on with mobile home parks is vacancy and leasing and collections. Those are the three things that I'm really focusing on. And it sounds very simplistic, but it's like the boring work that it takes to. So, in the mobile home park world, if you have an 80% occupied park, it's pretty much breaking even. The money's made on the 20%, you know? So, but the 20% becomes down to the granular where you're really focusing on, like, you can't look back and say, oh, I filled up 80% of this park, because some of the parks we buy are 100% vacant when we buy them.
Okay.
So I filled up 80% and I could say, man, look at how much more revenue we have. You're like, well, you just started. So now we got 20 more percent to get to the profit, to really get to that pro forma rent that we wanted, or the pro forma value, is when you focus on that 20%. And it's just blocking and tackling. We're focusing on vacancy, occupancy, and leasing. Those are the main things,
Yeah. So do you remember, this has been on my mind a lot lately too. Do you remember what the strangest secret is?
No.
It's we become what we think about.
Yeah, I could see that.
Right? So what problem are we trying to solve? Can we move towards that? Do you know what the most fertile land in the whole universe is?
No.
Your brain, right?
Oh, yeah.
It's 6-8 inches between our ears, right? So, if a farmer has a field and he plants weeds, he gets weeds. If he plants corn, he gets corn. If we plant trash in our heads, we get trash, right? So our mindset as we approach it is vital. What I have experienced in solving the banking problem is the people that are successful in business, they have this, success leaves clues, right? And their pattern of success started with, hey, I'm trying to solve a problem. And then they said, hey, I'm willing to learn. So we have to be willing to maybe admit that our baby's ugly, right? There can't be a sacred cow.
Yeah.
Right? Obviously, my baby ugly is a figure of speech, but hey, maybe the way that I was doing things is not ideal. Maybe this benefits other people. And ultimately it's, hey, show me what I don't know. But it's not, hey, arms crossed, hey, I've got it all figured out. I make $1.5 million a year, $10 million a year. Go down to Southwest Florida. Nobody cares. Right? If you got $5 million in your checking account, nobody cares in Southwest Florida, right?
Yeah.
$100 million don't even get you to the top of the food chain.
Yeah.
So somebody's always bigger and better. So I'm actually curious, what do they know that I don't? It's just like at jujitsu. I mean, there's always some cat that knows more, is better. And I want to know what they know that I don't, right? Like my instructor today, he's been a black belt for 19 years. That's insane to me. It takes 10 to 15 years to get a black belt. And every one of these black belts will tell you, I didn't start learning this till I got my black belt. So I've been teaching people financial freedom for going on 14 years, and I am constantly learning more about how to serve people better in this process. The industry has evolved a little bit. How do we keep learning? I tell people all the time, come and disprove what we show. That's the posture we bring to the table. I'm not saying that in a cocky way. I'm like, hey, I'm willing to be wrong. I have yet to have anybody disprove our math yet, though. We have a whole course. It's just math. Basically built by a NASA engineer, at least a NASA engineer type, right?
Yeah.
It's the math, right? Disprove it. I'm willing to be wrong. And that's what we're asking you to do, because if you'll do that, you'll probably experience success that you haven't experienced before.
It gets to a point where it's like the more you know you don't know. You're like,
amen.
You're more open. It's the most successful people I know, when I'm talking to them, they are open to the idea. It's always they're not shutting it down. They're not telling you you're stupid. It's just they want to be shown the way, is really the story. There's one person in mind that you and I met, and he's very open-minded, and he just, it's just one of those things where I can admire when somebody
Yeah.
is more successful than I am, but also open to listening to me to talk about something else, you know?
Yeah. We have unique abilities that we can bring to the table, right?
Yeah.
Like I've been in the trash business. I own a business in that space and I've owned it for 6 years. We've only had some degree of success. You know, to the person that can't spell trash business, I look pretty successful, right?
Yeah.
But not in my world. Like I want to talk to the guy that's actually turned this into something way bigger. I've had real estate investments that have done really well, but I've never invested in a mobile home park. I'm actually really intrigued by buying a mobile home park. But I'm going to come to Glenn and say, hey, because I've had successes in other things doesn't mean squat as it pertains to this. I used to be able to land a 747 within a couple square inches wherever you told me on the runway. Who cares? Doesn't mean anything. That doesn't translate to business. So it just means that I'm willing to learn, or it can mean I'm willing to learn. And that's what we're asking people to do.
So let's go a little bit deeper into that, just because it's more of like because you talk with so many people daily about the infinite banking concept, like what is the problem that we're trying to solve? Like I can kind of see it, but you're so good at articulating it. So
The problem we're really solving in a really macro level is that we're giving up control of our money. Okay.
mhm.
So how much of our money do they want, Glenn?
They want all of it
All of it. How long do they want it?
for as long as they can,
And how much of it do they want to pay back?
as little as possible.
I always just say as little as we'll tolerate, right?
Yeah, exactly.
So, but the next natural question is who's they? And that's the banks, Wall Street, and the government.
Exactly.
Okay. They don't produce anything. They take our money, they put it to work, they pay us back as little as we'll tolerate. There's your 6, 8, 10, 12% in your good growth stock mutual fund. Most of it's BS. There's all kinds of distractors in there. Average rate of return, that's BS. What's your actual rate of return? You know, like there's things to uncover in there. And we spend our lives being the customer of a system. And that system is really a game that's being played, and it's being played so well, we don't even realize there's a game being played. And you're like I am. You came to me when you called me that first time, I think 2 years ago now?
Yeah, I think it's 2 years.
Okay. And you had absolutely figured out there's a problem. You just didn't know how to solve it yet. You were getting to the end of the internet trying to solve the problem and wound up on the other end of my phone.
Yep.
Okay. It is no different than I was 14 years ago flying an airplane through the middle of the night from Louisville to Denver when someone said, have you ever heard of being your own banker? And he said that after I lamented about the fact I was interviewing financial advisors. And I said, man, these dudes are good dudes. I'd probably have a drink with them or play golf, but I'm pretty sure their shtick is for their benefit, not mine. I just can't put my finger on what the problem is. And this guy says, have you ever heard of infinite banking? And I said, I don't know what you just said. And so I'm trying to get to the end of the internet at 35,000 feet at 4 a.m. and he can't answer any of my questions because he's a brand new client of someone that's one of my best friends in the world now. And he's just like, go read the book. So I wound up reading Nelson's book, Becoming Your Own Banker. And, you know, it generated more questions, right? But what Nelson articulated so well was the problem that we need to solve. And that is that we finance everything we buy. It's that simple, right? We either pay interest to other people, or when we pay cash, we give up the ability to earn interest. Glenn, do you agree that there's no in between?
There's no in between.
Okay. So the latter one is where people get jammed up, right?
Yes. Yep.
They're like, well, Dave tells me cash is king. That noise of cash is king is a lie. Okay. Because though I'm going to give 2 examples to help your listeners here. So if we had money in a high yield savings account right now, earning 4%, and let's say we had $1 million in there and a real estate deal came along, Glenn's got a mobile home deal he wants to execute. And they're like, yeah, I want to put that money with Glenn. And they think, well, I'm going to invest my cash in that. And they withdraw the $1 million and they give it to Glenn. Well, that money actually cost them 4%. And I know there's people right now that are doing one of 2 things, like absolutely agreeing with me or going, holy cow, what did he just say? Remember, your cash, you gave up the ability to earn 4% in that high yield savings account. yes, you got something with Glenn with your return, but the problem is you had to choose either or. And we'll get to that later. But it still costs you money, and it always does. So let's use an example just to help you. Like, I know this is a gross example. This is an example of compound interest. It's a penny doubling every day for 31 days. Okay. So 1 penny, 2 pennies, 4 pennies, 8 pennies, 16 pennies, right? Like, it's pretty boring. We get to day 22 and we have just shy of $21,000. Now, if we're following the Dave and Susie plan, we go, I want to pay cash for my cars here. And so we go and we say, all right, I'm going to take my $21,000. I'm going to go buy a car. And what happens to my compounding?
It stops.
Starts over. Yeah, starts over the next day. 1 penny, 2 penny, 4 penny, 8 penny, 16, right? So on day 31, we have $2.56. That's pretty boring. That doesn't excite you, doesn't excite me. And that happened to me 15 years ago. Right before I met Nelson or read his book, I just paid $35,000 for 2 new to us cars. And it stung my entrepreneurial senses, but I didn't know there was another option. Okay. So in Robert Kiyosaki's book, Second Chance, which is a great listen, if anybody is looking for a book to listen to on Audible, he talks about that there's 3 sides to every coin. And people are like, oh, wait a second, there's just 2 sides. Well, no, there's a third side, right? And that's the side we're choosing to walk through is, wait a second, I don't have to just be the debtor, the guy that just goes and borrows money. And I don't just have to be the spender who just pays cash. I can actually be what we call the wealth creator. So the solution to that problem is a little deeper conversation, but what we really have to understand is this problem. And that problem is how the banks work, how Wall Street works, and that there's this interest that we can turn around to us. We don't have to be the customer of this system. We can actually be the owner of the system. We can be the depositor, the owner, and the borrower. And that paradigm shift, it requires our thinking. So like Marcus Aurelius said, a man's life is what his thoughts make of it. We have to be willing to rethink our thinking. Nelson Nash's book, the first 35 pages of it, is all about talking about the problem. And he basically, before he gets into the solution, he says, listen, if you're hung up on any of this stuff so far, go back and read it again. Because we can't understand the solution if we don't understand the problem.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. I'm going to ask a quick question. I feel like it's a question that most people would have. So we talk about, having this 4%, 5% return.
Yeah.
And then we interrupt it. So we decide to now instead of interrupting it, we decide to borrow against it. How does that not, I know the answer, but at the same time, how does that not stop the compounding of that money, the cost of capital?
All right, before we go there, any other questions about the problem?
I don't know.
All right.
I don't have any.
So as long as we agree that we finance everything we buy, we can go on to the solution. And Nelson said, so let's talk about the bank. Before we go there, let's talk about the bank.
Okay, so just to stop right there, what you're saying, we finance everything we buy. So if we take cash out of the bank, we stop earning 4% on that money. We take it and we put it towards whatever it is. It could be a car, it could be an investment, but that 4% stops earning income.
Yeah. So let's talk about something too before we go down this road, because I think this will help everyone. There's another little sub problem in here. Okay. And it is this rate versus volume. Have you ever been into a casino going?
Yes. Yeah.
All right. Me too. It's not something I frequent, but when you walk into the casino, all the lights and sirens and the games that are got the noises going on, do you have a good chance of winning at those games?
No.
The games that you can actually get close to 50-50 chance, there's no one inviting you to come play it. Craps, Baccarat, and Blackjack, right? Like if you play those games properly, you can get pretty close to 50-50 chance, right? And there's nothing attracting you to go there. So there's this rate versus volume. Okay. The rate of interest is a distractor. It's like the slot machines trying to get you to come play. Okay. The volume of interest in every payment is what actually matters. Okay. So think of it like if we were going to go get a shot, okay, at the doctor. It's not how fast they inject you that matters. It's the volume of medicine in the syringe.
Yeah.
Too much might kill you, not enough won't do anything. So let's expand on that for your listeners. And if you got a pen and paper, write this down. But let's say we went and got a $300,000 mortgage at 5%. So that works out to $1,610.48, I think, a month. Okay. We take $1,610 and change times 360 payments. That's $579,000. All right. You borrowed $300,000, you got to pay $579 back. That works out to be 48 cents of every dollar went to someone else in interest. Now, Glenn, if you earned $1 and had to pay me half of it, do you care about the rate or that you had to pay me half of the money?
What are we borrowing against?
Doesn't matter.
I guess it matters that I pay you 50% of it.
That's right. It's about the volume of interest that you pay. Now, with the bank and your mortgage, it's worse than that because the first 7 years, it's over 80 cents of every dollar goes to someone else in interest.
Yeah.
So what's the bank willing to do after you've had a mortgage for 5 or 6 years?
They want to refinance, right?
Yeah, they're so nice about it too, aren't they, Glenn? Like they're like your loan officer's calling you, hey, we'll refinance this for free for you. And now they've gotten so good, they'll even get you to pay for the appraisal. I remember when they paid for the appraisal too, right? So they're not trying to lower your payment $150, $200. They want you to stay in that high volume of interest first 7 to 8 years. When people see 5 and 7 and 10-year ARMs, it's not so that they can reset the interest. It's so they guarantee that they keep you in that high volume of interest. Okay. I'm not saying don't go get a mortgage. I'm just saying understand what's going on. And this is what Nelson was talking about. So let's talk about if we're going to even consider being our own bank, shouldn't we talk about how the bank works?
Definitely.
So let's talk about that. So Shakespeare said, if we understand the players in the play, we'll know what's going on. So we go down to the bank, we deposit money at the bank. Now, Glenn, to the bank, is that an asset or a liability?
It's an asset.
So most people, I know you're being a good partner here, but most people would answer it that way. And it's not the right answer. To the bank, it's a liability because they got to pay the depositor back whenever they want it. The bank has to loan that money out. The loan is the asset. So everyone needs to remember there's 3 players in the play: depositor, owner, borrower. The bank has to lend that money out. The loan is the asset. Glenn, if we were going to buy a bank, we would evaluate their loan portfolio. Okay?
Yep.
Not how cute their building is. We want to evaluate the loan portfolio. So the borrower pays the bank back. The bank pays the depositor back. Let's apply some numbers to that. Let's say that we deposited $10,000 at the bank. Now the bank is so nice, they're going to pay us 0.2% interest. So it's $20. Now the bank turns around and sells that money for between 4 and 28%. All right. On average, 5.2%, $520. Okay, so those listening at home.
We got to go a little slower. I'm trying to grasp what you're saying. So do it one more time, or we can edit it and then get you to draw it out if you want.
Yeah, no, it's okay. Let's just do this. So just the depositor is going to get paid $20.
Uh-huh.
The bank is going to receive $520. How much better did the bank do than you on that deal?
The bank.
They did. A lot of times people will say $500. But if you take 520 and divide it by 20, you get 26. That's 2,600% better than you. Now, hold on. This is the important part. They did it with your money. Glenn, how much of your money do you use when you go buy a mobile home park?
I try to use as little as possible.
Little as possible, okay? So it's leverage, right? It's not that it's some villain word, okay? It's the way of the world. I leverage my assistant's time and talents. I leverage the jiu-jitsu gym's facilities for me to go train and learn. The banks, Wall Street, and government leverages our money to benefit them. I have to understand what's going on. And right now, if you're not doing this, you are only 2 players in that play. You're the depositor and you're the borrower. Well, all we're showing people to do is, how do you be the owner as well so that nothing leaves the system? So I ask people this all the time, especially people that use Wall Street. Would you rather have all the money you've made in Wall Street or all the interest you've paid to other people?
All the interest I've paid in people.
You didn't even flinch.
Guaranteed.
Now, do you have people in your life that would probably answer that differently?
I don't think so.
No. And even the people that you know making millions of dollars, right?
If they're paying cash, they're still not being honest with themselves.
That's right.
Yes.
So have you ever sat down with a financial advisor and they talked to you about solving that interest problem?
No.
No. Why?
Because they want your money.
Because it doesn't benefit them, right? So it's not like what we're talking about here is not your truth or my truth. It's just the truth about how the financial system works. Now, some people can't handle hearing that their baby's ugly. All right. The people that win go, oh crap. Right. Or what we just did in this conversation was lower, instead of them just feeling like there was a problem, now they're starting to understand what the problem is. It's like, wait a second. Well, Nelson says in a book, hey, if you know what's going on, you'll know what to do. So the details of the solution aren't even important at that point. It's like, there's no chance I want to do that anymore. I don't want to give up control of my money to someone else. Now, I'm not saying that I wouldn't go lend money to you to build wealth, to build cash flow. I've had people lend me money in my ventures to go build wealth for them, but we're doing it together, right? And we get a certain amount of control. It's a little different when we do the wealth creator step. Questions?
Definitely. I was just kind of reflecting on right before I met you, really how I was just coming to, there's a few things that I was thinking of before we met, but I was going through, I had this one refinance that two failed refinances that took me over a year to find out that they were failed refinances. I am a deal junkie, so I end up, anytime I see a deal, it's hard not to try to figure out how to make it happen.
Yeah.
That's how you get to 650 units. You just keep buying real estate. But at the same time, I was feeling stressed out. I was feeling underfunded, waiting for the other shoe to drop just because of what was happening in my life. And I had become an employee of the bank is really what I turned into.
Yeah.
If you looked at how much interest I pay, it's turned into how do I recapture that? And I could tell you there's been like 2 or 3 times in my financial background that I sat down and realized how much, even when I was making $2,000 a month, when I was making, $100,000 a year, and then at that time. So
right.
It's like I had these life-changing experiences where Dave Ramsey did work when I was making $2,000 a month. I had to freaking figure out how to not pay $600 or $800 a month in interest.
Yeah.
And then it turned into, now I need to build assets. The assets started growing and this cash flow seemed to be flowing out of my life because of the assets that I was consistently buying, investors. And then also the other thing that I realized is how much the banks love cash value, life insurance, as literally on a balance sheet. And that was the thing that I was kind of like, okay, so I have this safe, liquid location that I can store my capital that makes me a very good customer to the bank, really, because I have this big liquidity reserve.
Yeah.
But then I also have I have this plan where if I focus on this for 20 years, I'll be able to recapture all the interest over time.
Yeah.
And that's like, it just seemed like a very well laid out plan that was, for me, it felt guaranteed to happen for what we were doing.
Yeah.
And that's really why I got sold on the idea. And then just to add a little bit to it, I've talked to so many practitioners, but when I talked to Nick, all the loose ends, he would just kind of close them up. Like it was just like, no, that's not the way to do it. That doesn't make sense. This is what I wouldn't send my mom to that person.
Well, here's what, and just so everyone is clear, Glenn came to us as a client who has now become a practitioner with us. And it's a true joy to work with you, to watch you go across the epiphany bridge of enlightenment, right?
Yeah.
I love working with you because you just have a penchant for learning. You're soaking it up. And our firm is built on just being 100% transparent with this. We had our other partner, Jim, and I met with a guy today who is putting $750,000 a year into a policy with another quote unquote coach for 2 years now. And the guy has no idea what he's doing. He's not being educated. it's kind of sales chicanery, which is going on. And that's what he showed us today. And it's like, no, hey, let's peel back that onion and let's look at all of the thing that's going on here. And I love because Nelson Nash came to Louisville for me 10, 12 years ago. I was one of his last stops. He used to travel the country. Guys like us could put people in a room and Nelson would just teach it. And he started the whole thing off and he held up a Bible. Kind of cracked me up the day he did this because I kind of wanted to crawl under the chair when he did this. I'm a little embarrassed to say that now, but he held up the Bible. He goes, hey, everything we're going to talk about today went through the lens of this first. And what he was talking about, it was just going to be the truth. You don't have to accept it, but this was just going to be the truth. I love that. And Jim mentored me, Nelson directly mentored Jim. And now Jim and I are thick as thieves. Like we fight like brothers and we run like brothers together and doing this and teaching people. But it's just, yeah, hey, this guy this morning, he tells us, yeah, my guy tells me that I can do this with the policy. And it's like, yeah, that's technically correct, but it comes with this pitfall over here. Like coaching the whole thing so that you can run without worrying about stepping in a hole. Now, you've mentioned insurance here a little bit, and so I don't want to ignore that or confuse people with anything that we're not tying up. Nelson said, this is not about a product, it's about a process. So when I say, hey, we have the depositor, the owner, and the borrower, and that deposit, lend it, pay it back, pay the depositor a little interest, that's the process I'm talking about. And Nelson said, listen, you can do that with a shoebox full of cash. He's got an example in his book. We call it the CD sister and the IBC sister. Page 45 of his book. Might be the most important page of his book.
Yep.
It's, hey, here's the person that did that process with the CD versus the person that did it with a policy. He just said, hey, the most ideal platform is this very specifically designed life insurance contract with a mutual company. And a mutual company just means we're the policy owners are the business owners. We own the insurance company. Ownership has privileges. So Glenn, if you were shopping for groceries and I owned a grocery store and you owned a grocery store, would you go to mine or yours?
I would go to mine.
And if you had a grocery cart full of groceries at your grocery store, would you go out the back door and steal them all, or would you go out the front door and pay for them?
I'd go out the front door and pay for them.
That's right. So all we're doing is now shopping for money from a financial institution we have ownership in. And that comes with privileges. And Nelson said it's all about how we think. So we're spending our lives being a customer of a financial system. We feel big and bad. How many times do you hear a guy say, yeah, my guy. I got a guy.
Yeah.
Right? Everybody wants a guy.
Yeah.
Right? Because they want to feel that feeds our ego. Man, I got a guy in the insurance space. I got a guy at the car dealership. I got a guy at the lumber yard, right? I got a guy at the bank. My guy on Wall Street. Yeah, cool. That's all cute. You're a customer. But what would it look like if you just put yourself in the ownership seat? And those insurance contracts, which we won't get into it here today, but it comes with a very specific set of privileges that no one can take from us. And one of my early questions was, like, who does this? And Jim peeled back that onion for me, and Nelson did too. It's like, hey, every Fortune 500 company does this? And I was like, that kind of stopped me in my tracks. I was like, okay, tell me more about that. And it was like, hey, Harley Davidson, Pampered Chef, JCPenney went out of business, I guess, but there's a couple of the Bed Bath & Beyond, Walt Disney, all of those were started with life insurance loans. Okay. That's pretty fascinating. Everybody can look up a Walt Disney story of taking a loan from his life insurance contract to start Disney World. You got every major bank in America funds these. Bank of America has $24 billion in cash value life insurance, not death benefit, cash value. It's so good that the government limits how much they can put into this. 25% of their tier 1 assets can go into cash value life insurance. 53% of community banks. Our current knucklehead president and the previous knucklehead president does this. And half of Congress. It's all public disclosures. So we're told to go be a customer of this financial system, but the people writing the rules are being the owner of the system. So I'm the type that when everyone's going right, I'm curious about what's over here to the left. Only the dead fish go with the flow. So I don't care if you make 50 grand a year or 50 million a year. this can work for you some way, somehow. It's just, this is where we cater our coaching is tell me more about your problem, the problem you're trying to solve. Is it that you figured out that paying cash to the IRS stinks? You had $1 million tax bill. I got a client just had $1 million tax bill. They borrowed from their policy to pay it. This will make some heads spin, but effectively the IRS is funding their banking system.
Yeah, I saw this comment the other day about somebody, it was like an anonymous comment, but they said, we're high earners, but we're just barely getting by. And I think once you see it, it's like you can't unsee it.
No.
So then it starts to become where you want to like be like shout off the top of a mountain and be like, this is the solution. But it's like,
yeah,
you got to meet people where they're at.
Yeah.
But it's like now that I have been like, I guess, exposed to this and understand it, it's more along the lines of like, I just wish I could get more people to understand like taking back ownership is really what we're doing.
Yeah.
And just like with what you're doing, you're going to jiu-jitsu a little bit like right after this. I'm going to drive some mobile home parks.
Yeah.
I believe we have some ownership of our lives. We're able to go, I go to gymnastics to see my 4-year-old, my 6-year-old around 3:00 yesterday in the afternoon. And it's a little inconvenient for like what I'm just trying to get done all day.
Sure.
But I realized that like this is why I got into being financially independent, and ownership is constant taking back of ownership. I think that's what the wealthy do is they're constantly looking for ways to take back ownership of their finances and to never slide backwards is really the goal. So,
So any of your listeners, I'm going to make an offer to you. We have a new book. It's called Owner Shift. It's about just shifting your mindset. You reach out to us after listening to this. We'll send you a copy of it. And the only thing we ask is that we have a conversation, 15, 20 minutes, just talk about the problem you're trying to solve. We'll get you that book in the mail. We're also having an Owner Shift seminar on May 7th. I think we just scheduled that the other day. So if you want to be involved in the Owner Shift seminar about what that looks like, reach out to us. You can contact us at CreateTailwind.com. There's a contact us button. Hit that. We have a no hassle guarantee. So you'll get some invites, but if you're seeking to just learn more, this is what we do. We sit down and strategize with people so that you can decide whether this is for you or not for you. But I just encourage everyone to rethink your thinking. And those that I see that are successful are always willing to do that.
That's awesome. Thank you so much, Nick. And
you're welcome.
Looking forward to future conversations.
Yeah, buddy. Appreciate you.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.